All right, welcome. I am Coach John Tubiolo, and what I want to talk to you about today is my journey to making $1 million, or how I became a millionaire. And it's kind of interesting because a lot of people don't really understand the concept of $1 million or becoming a millionaire, what that looks like. And a lot of people have this weird misconception that you actually have $1 million just sitting in the bank or sitting in a corner of your house. And that's really not how that works. Most millionaires have a lot in asset value, but they don't necessarily have $1 million cash, right? If you have $2 million, $10 million, $50 million, or $1 billion, most of what you have is usually tied up in assets, right? Things that are valuable. They could be in stock holdings. They could be in real estate. You know, if you owned a real estate portfolio, or you had let's just use a house as an example, right? If you owned a $250,000 house, and I'm not saying you owe anything else, but you just have this house. It's all you have. You don't have any money in the bank. You don't have anything, but the house is paid for and it's worth $250,000. Then you have a net worth of $250,000. It doesn't mean you have cash, but it means you have value or a net worth of $250,000. Now, in the same breath, understand this: anything you owe goes against your net worth. All right, so anything you owe on goes against your net worth. So if you have a house that is valued at $250,000, but you owe $200,000 on that, then you actually have a negative net worth. You have $50,000 in equity. You owe $200,000, so you could, pay off $50,000 of that. But you would then have a 150 minus negative $150,000 net worth. So you take what you have and you minus your debts from it, and that gives you your net worth. So when we talk about when I became a millionaire, how I became a millionaire, a lot of that had to do with, of course, some money in the bank, right? Some money in the bank, $10,000, $15,000 in the bank, $20,000 in the bank, $100,000 in the bank, whatever. And then the real estate that I had, I paid off, as well as my investment portfolios and my stocks and things like that I own. That's how I accumulated my first $1 million, or how I became a millionaire. So one of the things that I tried to do, and I'll kind of explain a little bit about my journey and how I was able to achieve that. And I was able to achieve that with I didn't make $200,000, $300,000, $400,000 a year, right? When I first started on my journey, guys, I was only making about $25,000, $30,000 a year. And I was in commission sales. So the one thing about commission sales is, and if you're not familiar with how commission sales works, it's really, really simple concept, right? The more you sell, the more money you make. The less you sell, the less money you make. So the interesting thing about my journey was, when I got into commission sales, I didn't know what I was going to make on a day-to-day basis. I had no idea what I was going to make. I had goals, and I had that I would shoot for, and I had sales goals, and I had personal goals, and income expectations. So I had to go out and perform, but I didn't know if I was going to get $1,000 that week, or I was going to make $250 that week. A lot of it depended on, and it depends on where, and where and how you sell. But I had to go out and hustle to get my own leads. I had to go schedule my own appointments. I had to do in-person demos. And then I had to sell that customer. And then I had to ask for referrals to get another one so I could make another phone call. I didn't do the door-to-door thing, but it was all referral based. And it was about presentations in homes. And I would sell products, and I would sell one or two products at, a few $100s, and I would get a percentage of that sale. Usually it's about 10% commission. So if I sold a product for $200, I made $20. If I sold a $100 product, I made $10. If I sold a $50 product, I made $5, right? So that's kind of how I started in the selling game, and I've sold everything that you could possibly imagine. I mean, I've sold it all from knives to freaking vacuum cleaners to parts and furniture, automobiles. I worked at a junkyard selling used auto parts. and I would have to go out in the back and strip the car down of whatever somebody wanted. So that's how I made, money as a kid. And growing up, I worked as a carpet installer's helper. I've had a lot of different jobs. I worked in fast food, and that kind of helped me to find my passion. Obviously the military was part of that too. That wasn't a commission job, but I made money in the military. Not a lot of money in the military, but I made money in the military. But the one thing that I always tried to do is I always tried to put more money into savings than I was spending, right? So I always tried to keep my personal overhead low, right? Living below my means. If I had, was making $250 a week, I didn't go out and blow $250. I didn't go out and blow $300. I didn't have a credit card to charge up. I focused on how do I get 200 of those dollars in the bank, right? When I was in the military, the beauty of the military was I didn't have any expenses. I made mistakes, right? Like everybody makes mistakes. I went out and bought a freaking car and it had a lot of, heavy car payments and stuff. Luckily, some things happened in my life and I was able to get rid of that car and not have a ton of debt going to that. But it taught me a lesson. It taught me a lesson that you can't spend more than what you earn, right? And when you're in the military, everybody finances you. I mean, you can get financed for anything you want because they know you have a guaranteed income and they know they can go after that income each and every month. But I lived in on base, and military, put me up. So I didn't have room and board expenses. I didn't have meals I could eat in the mess hall, in the chow hall. I was in the Navy. And, I could eat there. I really didn't have to pay for electricity and insurance and all that stuff. I did buy a motorcycle, but I bought it used. The insurance on that was pretty minimal. And so I was able to control my cost, right? So the only spending that I really did was when I went out with my buddies. And that was pretty easy because I could kind of control a little bit about, how much money I would spend. I wouldn't go out all the time, but I was able to put a lot of that money away. And it kind of a little bit like what's going on now with the stimulus, right? I mean, people get their stimulus checks and first thing they do is they start going out and they start buying a bunch of crap that they want to, they want. And you can't really do that. If you're focused on building wealth, you can't just spend your money on foolish things, right? So I was always focused on how do I put money into the bank. And back then, the banks were paying about 1.5%, 2% for a savings account. So I'd funnel as much money as I could in there, and I was getting, like I say, 1.5% to 2% on my money in savings. As time went on, I was building more and more value or more money in my savings account, building that equity in my savings account. I started to look at other investments, right? And this was at a pretty early age. I started to go, well, I hear people talking about stocks and things like that, and maybe I should, look at buying some of that stuff. So, I was a pretty young kid. I was 16 years old and 15, 16 years old. And I'd go into a stockbroker and I'd say, hey, I'm looking at buying some stocks. Can you help me out? And these financial planners were like, well, yeah, but you really got to have more money than, I don't know what you got, kid. But, and I had about $10,000 saved up. And all of a sudden now they were willing to talk to me. So I was able to buy stocks and buy and put money in investments, right? And I kept still building my savings, but I invested in some stocks early on. Now, two things that I've learned from that, right? Stock market goes up, stock market goes down. When the stock market goes up, you make money. When the stock market goes down, you lose money in a stock. So I started to look at, what stocks did I want to put my money into? And fortunately, I had a pretty good broker, right? I had a guy that was not only, trying to help me out, but he would educate me. And so he talked about blue chip stocks. And, when you're young, you really don't know what blue chip stocks are, but blue chip stocks are really simply companies that have been around for a long period of time. And most of those pay what they call a dividend. So they pay you to own the stock. They make so much money, and these are companies like Disney, Coca-Cola, 3M, right? These are big companies that have been around for a long time, and they make so much money that they actually pay the people who own their stocks a dividend. And that could be $100 a year. That could be, and it's broken up into different, some pay quarterly, some pay yearly, annually, some pay twice a year. There's a lot of different ways that they pay that. But what happens is you get that money from that stock that you own, and it gets reinvested back into that stock or another stock. And usually what I would do is I'd just keep reinvesting that money back into the same stock. So I would buy more and more shares of a particular stock, which was increasing in value. The beauty of that is even if the stock goes down, you still get paid your dividend. So I wasn't really losing any money if the stock went down because I was still getting some dividend income off of that. And it doesn't sound like a whole lot, right? When you're talking about $100 a year or $50 a year. But if you own enough of those and you're making $100 a year off of, say, 10 companies, that's $1,000 that's getting reinvested. And then you're getting a percentage higher in dividends when you reinvest your money, right? So that's what I was doing early on. And again, continuously saving money. I was still, being in commission sales. One of the rules that you have to follow is you really need to have money in savings so you can cover your monthly nut on expenses if you don't make good money. If you had a bad month and you're not bringing in what you should be, and let's just say your annual or your monthly expenses are $2,000 and you bring in $1,500, then you've got a $500 deficit, right? A negative $500 that you owe somebody. So you have to come up with that money somewhere. So early on, again, these are, the information that I have is not shit that I invented. It's things that I was taught from the people that I was fortunate enough to be around in my life. And one of the things I think that, and everybody has this opportunity, right? Everybody knows somebody who is successful in certain areas, and they may not, they may have a really crappy personal life, but they may be doing really well financially. Look at what they're doing right in their lives and ask them about that. People are really eager to share information and help build others up. So I was really, really fortunate that I would ask questions to the people that were doing really well in certain areas of their lives that I wanted to improve my life in. And I would heed their advice. I would take their advice and I would use their advice to benefit my life, to make my life better. That's where all this information and wealth of knowledge that I have comes from. It's not me sitting around inventing some shit. There's some stuff that I creatively came up with, but the systems have been in place for many, many years, right? Thousands of years probably, because somebody passed that information on to them, right? And somebody passed that information on to that person. And so it's just information that gets passed on. And that's what I think is so beautiful about the internet is you have the ability to reach so many people with information and really educate a ton of people. That's my goal is, reach over 1 million people. So, right now I'm going to ask you, if you've not already subscribed, smash that subscribe button, because I'd love to have you subscribing to my channel so I could pass on the information that I have. Obviously, the information I have is available in my book. It's available on Amazon. You can go buy that, or you can just listen to my videos. The videos are going to cover some of it. They're not going to give you the whole in-depth, deep dive into the stuff, but it's going to give you enough information to be able to take action on your life, right? So when I was in sales, especially commission sales, I had a guy tell me, he said, you really need to have about 3 to 6 months of income built up in case things go south, or, if something happens in the economy and the jobs start to sour, the market starts to sour and people aren't spending money, you need to have a backup. So I was always fixated on having that 3 to 6 months of income in my life. As I moved up in companies and I moved up in management, the philosophy there was, as a manager, right, or as an executive, you should have at least 6 months to a year worth of income built up. So if you lost your job, you would be okay for 6 months to 1 year before you found another job to replace that at the same income level. Or even if you took another job somewhere and you weren't quite at where you needed to be income-wise, you could still have a year to ramp up to that income level. And if you're supplementing some of that, then obviously you could spend 2 years, right? But you have to have a backup plan. So I always had money in the bank and always had cash reserves in the bank. And I still to this day have that. Still practice that, right? So as I was investing. And as I was building my savings, one of the things that I wanted to do is start looking at real estate, right? Not renting, but owning. And I just saw that, look, I could pay somebody, and again, back then it was $500 a month, right? I could pay somebody $445 a month, or I could buy a house and pay the mortgage on that and start building wealth in real estate. So my wife and I bought our first house, $50,000 house. And that doesn't sound like a lot, but it was a lot for us back then, right? And at that time I was making about $35,000 a year. My wife was bringing home about $15,000-$20,000 a year, so we had an income. We had, revenue streams of our, our investments were growing as far as our stocks and things like that. We had a savings account. And when, one of the tricks that we did, and I explained this in the savings game, it was another video, but it's a great way you can kind of encourage yourself to build a little bit of a nest egg and build that cash reserve. But one of the things that we did is when we got to a level to where we were starting to put more money into the savings account than we really needed, and then banks started to pay less as far as interest on the money that you had in the savings account, we would take a portion of that money, usually half of what we had in there, and we would put it into what we call a high yield savings account. And they still have those, and I still have that today. I have a regular savings account with, very little money in it, but enough that if something were to happen, or, furnace were to break or something, we could go out and pay to have the furnace replaced without throwing it on a credit card and making payments on it that it's going to cost me 21% in interest. We could pay that off. But most of our money, if we're going to talk about savings, is going to be in a high yield savings account. And those accounts will pay, 2, 3, 4, as high as 5% on the money that you have in savings. And when you're talking about, $100,000, guys, 5% on your money at $50,000 or $100,000 is substantial, right? I mean, 10% of $100,000 is $10,000, right? But I'm making, I'm making $5,000 a year off of my savings account with $100,000 in it. That's a pretty good return, right? And at the rate of return that you're looking for in your investment portfolios, kind of between 8 and 12%. And we have some that are doing really, really well. They pay 15-20%, right? But that's not average. That's kind of above average, and sometimes they don't pay as much, right? But on an average, you're looking between 8 and 12% return, right? And 12% is a really good return on your money. Average is between 8 and 10. So having that investments and growing all the time, and again, always 15 to 20% of my income and my wife's income, we would put toward investments, right? Whether that's 5% into savings or 10% into savings, 10% into stocks and things like that. And then we had our real estate, right? We start paying off our house, and we try to pay off our house early because we didn't want to owe on it. And so over time, right? Over time. And we didn't do this in a year, right? We didn't do this in, it took several years, of continuously and aggressively saving money to where, and paying off real estate and not foolishly spending money on things that would decrease in value, right? Like a new car, you go out and buy a new car for $30,000, you drive it off the lot, you lose $3,000. In 5 years, that $30,000 car, you're lucky to get 15 out of it, $10,000 out of it. And some of the times you hold that car too long, and you're going to get $2,000 out of it. So those are not assets, right? So I don't buy new cars, I buy used cars, right? I get really, really good deals on used cars, and I think, look, if I'm going to have this car for 10 years or 5 years, and I spend $10,000 to $13,000 or $15,000 on it, what does that break down to a year? That's a hell of a lot cheaper than buying a brand new car at $40,000, $50,000. And then I have every time I make that payment, it's losing money. When I go to sell that car, I'd rather recoup half of the value of that car, or rather than 10% value of that car or 5% value of that car. So for me, it's very, very important to put my money in things that actually start to grow and start to build. And over time, right, my investments with that compounding interest and all those things, they would grow. And so 50,000 soon became 100,000, soon became 200,000. And when you start to have money that is really building upon itself, right? It's really easy to go from, it's hard to go from, nothing to $1 million, right? Or even $500,000 or 200,000. But once you start building that up and you get to that $200,000 level, what you'll find is, and you sell a house and you make money, and that's what happened with our first house. We bought it for 50, and a year later we sold that house for I think it was $85,000. That $50,000 house, we made $35,000 off of it. We then took that money and bought another house. It was a higher priced house, and that house appreciated in value, right? I've never lost money on real estate, because when the real estate market goes down, I don't sell, right? I don't sell. But I took whatever I had as far as what my assets were in that house, or my oh shoot, what do they call that? Geez, my mind just went blank. The equity in that house, and I would turn it into another house. I would put that money down on 100%. If I had $100,000 and I bought, and I sold a house and I had $100,000 in equity, I'd buy a $200,000 house, and I'd put $100,000 on, gives me $100,000 in equity immediately, right away, right? Now I own 50% of that house. And then I'm only making payments on that 100,000. And my goal was how fast could I pay off that 100,000, right? And then, so that was the process we used. And we, over time, in a relatively short period of time, because we were so heavily focused on how much we could save, that became a net worth of $1 million. And the interesting thing about that is, when you get to a $500,000 net worth and you've got these investments and stuff, it's amazing how quickly that grows. And $500,000 very soon becomes 600,000, becomes 700. When you get to $1 million, and all of a sudden you're starting to make, almost as much on your investments and off of, the things that you own, especially rental properties and other ways that you can creatively make money. It's amazing how fast $1 million grows to 2 million, and 2 million becomes 3, and 3 becomes 4, right? But that first million is the hardest million to make. But with smart investing, with very focused and dedicated savings and spending plans, so you're not just blowing money to blow money, but you're actually investing in things that are going to grow over time, that are going to make you money, you too can be a millionaire. It's not hard to do, once you put really good practices into play. The problem is, most people can't restrict what they spend. And they make $50,000 a year, they live like they're making 60. They're making $100,000 a year, they live like they're making 150. And so you've always got to watch what you're spending, and you should never spend more than you're bringing in. You should always actually be saving more than what you're spending. And if you can do that, then you can be a millionaire. And it's the same thing in business, right? When I do business consulting, one of the biggest things I always tell people is, guys, you got to control your overhead. You got to control your spending. If you don't control your spending and you're spending more than you're making, that's a problem, right? And with business, there's a lot of people out there who own businesses that are upside down in their business, that every month they're loaning their business money. And sometimes these people have a spouse that's working, and that spouse has to loan their business money in order to make it. Or they're calling their landlords all the time and trying to renegotiate how much they can pay for their lease because they can't afford to make the payment. And then they're letting people go because they can't afford the staff, and then now they're putting more hours into investing more hours into their business because their spending is out of control. So watch what you spend. If you want to have $1 million, guys, or $1 million net worth, right? Or you want to become a millionaire, and that's really what it is. If you want to be a millionaire, and that's having $1 million net worth, you can do it. You can do it. Each and every person watching this video has the potential of doing that. But you got to have the discipline in order to do it. And you got to be focused on the right things. Appreciate it, guys. That's kind of my story, a little bit of my story. It's, you know, in a nutshell, right? There's not a lot of deep stuff in there as far as like some of the other stuff that I've done in my life and some of the investments that I've made that haven't really gone that well. But the key is this: if I can do it, you can do it. I promise you that if I can do it, you can do it. I am not the smartest person in the world by far, right? But I was smart enough to listen to some really smart people. And I was smart enough to incorporate what they did right in their lives to make my life the success that I wanted it to be. All right, so if you like that, guys, smash that button. Share the video with people that you like or the people that may need to hear the same message. And I hope that you keep coming back, watch my other videos. There's some fun stuff in there, but there's some really good content. Appreciate you watching. And if you could help me, I want to build this channel up, and I would love to have over 1 million subscribers so we can really impact the lives of people around the world. And we can do that one subscription at a time. But help me out if you could. Thanks for listening. I appreciate having you guys here today, and watch my other videos. Thanks for listening. Bye-bye.